chance possible supply and demand levels. I mark the wicks as well. They are crucial. So this area, demand level. This is the wick. So here, the demand level here. Demand level here. So because of this, I'll show you something here. Because of this wick, price will, if price manage to reach this area, it will sweep it very fast, tapping into this area. So I won't mark that wick, so I'll just mark this area. So let me extend it here. So here, and I'll mark the wick as well. So yeah, like this. After marking this level, I'll wait for a sweep of liquidity. So here, sorry, my mouse is misbehaving. So if you look at this area, this is a supply level. So the resistance, let me say resistance here, then this is the wick, that's liquidity. That's where price is drawn to. So price came to this support, resistance level, swept this liquidity, then closed below this support resistance level. Sorry, let me use the supply. This is messing up with me. So this supply level. So after closing below it, it gave an engulfing candle here. This candle shows that the seller's momentum is higher in the market. So upon seeing this, just delete this. Sorry, I want a bit of headache. So upon seeing this, I'll just mark the candle that engulfed the previous one like this. Then I'll mark from the wick of the previous candle was engulfed straight here. So to this area, I'll just wait for price to come back, fill this imbalance, then tap into this wick, then I'll sell from that zone. So upon marking my level, I'll just go to 30 minutes time frame. I start from 30 minutes down to 15, down to 5 minutes for entry. So first area is the 30 minutes time frame. So 30 minutes time frame, we look for fair value gaps, we look for order blocks, we look for breaker blocks. So here sweep of liquidity here. So this is an order block here. But one thing I talked about order block is order block might have an imbalance. So you see, this is the order block, all right, but the imbalance was closed very fast here. So we use this candle, that is the one having an imbalance, that is this one. So we use this candle as our entry because all this area has been filled, so we can't consider that as an order block. Or this area that push price further down to break the structure. So let me just clean this so that the chart will be nice. So put this one here. So I'll just mark this candle here. Mark this candle here. Then see, as price came down here. So this engineered liquidity, this area was an engineered liquidity which price came to sweep, tapped into our area that is here, then sold off, so 50%. Then to be safe, you put your SL there. Kind of that strip the liquidity, the wick, so here. So the first TP where price reached, then it reversed. So here is the first TP here. That is TP1. TP1. So then you go down. You'll just be searching where price can reach, that is liquidity. So this is the sell side liquidity, the most sell side liquidity. So here, that is your, let's say that is your TP1. So you go down to the 2 hour time frame, then you search for your drawn liquidity. So here, sweep this one here. So this is already 4.4 RR. So this is a sweep on liquidity or this area. So just take your partials here, then you break even, then you allow price to run down to this area. So I'm hoping price, I'm anticipating price reach this level, that is 31 1 30 3,187. So this area, that is I'm anticipating gold to reach. So here, this is how I used to trade support and resistance, but some reason I I complicated my strategy, then I had setback small, but I'm getting back. I'm getting back.